it is important to summarize the manufacturing ledger accounts. You actually need to visualize these accounts in your mind and know the structure and the format of these accounts. So we start by investigating the balance sheet accounts. We have the raw material stock account. We know it's an asset, it should have a debit balance. Therefore, we have on the debit side the starting balance of the raw material, and then any other raw material that we acquire will also be debited since assets increase on the debit side. So our contra entry here could be in fact bank or creditors control. So then on the credit side is when our raw material stock decrease, and that is when we issue the raw materials. So it will move to the raw material issued account. So that will be our contra entry. Then we have our work in process asset account. So it also should have a debit balance. So remember, this is now the second room. So where the first room is where we store our storage room of inventory, we move it from there to the work in process when we start production. So as already indicated, it's an asset, so it will have a debit balance on the debit side of any work that have not been completed since the previous period. Then any direct material that is placed in the factory will go to the work in process account. So the direct material account is the other account that will be affected. And then similarly, any direct labor that's going into the manufacturing process will also go on the debit side. And the contra entry will be the direct labor account. And then finally on the debit side, we have all the factory overheads. So our contra account will be factory overheads. So on the credit side, we will reduce the work in progress by that which we transfer to our third room, namely the display room, where the finished goods stock will be displayed. So therefore, finished goods stock account will be the contra entry. We will have to debit that account. So speaking of, we have again an asset account still, so it should have a debit balance. So the opening balance of finished stock that was previously transferred from work in process will sit on the debit side, and then as we indicated just a few seconds ago, we credit work in progress and debit finished goods stock with the cost of the finished goods transferred from the factory. We credit when we decrease our finished goods stock asset with the cost of sales account. That is the stock that we actually sold. So we will therefore have to debit cost of sales. So that will be our contra entry. And then finally, we could have consumables on hand. So we have the indirect material on hand at the beginning of the year. On the debit side, since it's an asset on that first day of the financial year. On the credit side, we have the indirect material on hand at the beginning of the year to get rid of that opening balance, and then we create the new one on the first or the last day, well, the first day of the next financial year, indirect material on hand at the end of the year. So now that we have focused on the balance sheet accounts, let's focus on the nominal accounts. So we have our sales account, we know it's an income account, so on the credit side it increase. So all our cash and credit sales for the year. So you could have, for cash sales, your contra entry will be bank. For credit sales, your contra entry would obviously be debtors control. And we transfer at the end of the financial year or period to the trading account, where we will calculate our gross profit. So therefore we have to debit sales to get rid of that account in our books. It ceased to exist. It's transferred to our final accounts. Cost of sales, we know it's an expense, so on the debit side we will have the cost price of the finished goods that we sold. In the previous slide we already saw how the finished goods asset account we credited and our contra entry was cost of sales. That's why we are debiting cost of sales now, contra account being finished goods. And then we, similarly as for sales, we will get rid of it at the end of the financial year of this account. Remember, we need to get rid of all nominal accounts at the end of the period. So we will credit cost of sales to obtain that effect and debit trading account. So trading account is our contra entry. Raw materials issued, we know it's the expense account. So the raw material stock account in the previous slide, our asset, we know we credited it with the raw material that was issued, and this raw material issued account, expense account, is the one we will debit. So therefore our contra entry on the debit side is the raw material stock account. Now, since it's a nominal account, we also have to get rid of it at the end of the period. In this case, we will first transfer it to our cost account, which we'll focus on in the next slide. So in this case, we have the direct material cost account that will be debited. So therefore, our contra entry on the credit side is direct material cost account. Indirect material is also an expense account, so we should increase expenses on the debit side. So we have the indirect material at the beginning of the year, and then we increase it, the expense, with the indirect material that we purchased during the year. So either bank or debtors control or petty cash will be on your contra entry. Those are the accounts that will be credited. Then we need to get rid of indirect material as it's a nominal account at the end of the period. So what we do is, what we have on hand at the end of the year, we will move over to consumable goods on hand, as we have seen in our balance sheet account section in the previous slide. So the reason we are doing it, it's adjustment, because that which we did not use cannot actually form part of our cost. That's why we have to remove it. And then the part that we actually did use during the year, we will transfer to the factory overheads cost account, which is a cost account that we will deal in our next section, the cost account section of the general ledger. Wages and salary, another nominal account, and it should be an expense. So expenses increase on the debit side. So on the debit side, we have all the wages and salaries paid during the year. Then we know some of this salaries and wages are for direct labor, so we need to transfer that to our direct labor cost account. Some of it might be for administration costs, So those employees' salaries and wages, we transfer at the end of the period to the administration cost account. And similarly, it's possible that we have a sales and distribution wages and salaries that needs to be transferred to the sales and distribution cost account. So therefore, all these relevant cost accounts we will soon see in the next slide will be debited, namely direct labor costs, administration costs, and sales and distribution costs. So the cost accounts, we have the direct material costs. Remember in the previous slide of the nominal account section, we credited the raw materials issued account. Now we will have to debit therefore direct material costs, contra entries, raw material issued. And now we have to get rid of this cost account at the end of the period. So remember the path that it traveled is we started in the balance sheet account when we issued the raw materials, then it was transferred to the nominal accounts as the raw material issued. Then from there it transferred to our direct material costs account. Now finally it transfers to our work in process account. So we are moving it in fact to our second room, the production portion of the building. Similarly, direct labor costs. Remember, we transferred it from the salaries and wages account. We credited that account, so therefore we have to debit the cost account. So salaries and wages will be our salaries or wages will be our contra entry here. And again, at the end of the period, we need to move it now to our second room, namely where the production takes place. So we transfer it to our asset account, work in process. Factory overheads, well, we have the indirect materials used in the manufacturing. We debit that. And then any sundry expenses allotted to factory and manufacturing process. Remember, there could be various nominal accounts that relates to factory overheads. Like you could have electricity account for the electricity portion of the factory. You could have a water account for the water portion. You can have insurance account for the insurance. You could have depreciation for depreciation on factory equipment, etc. All those accounts we will list underneath each other on the debit side as we transfer it from the respective nominal accounts to the factory overhead cost account. So again, just as for direct material and direct labor costs, we need to move all of this to the second room in our building, namely the production room. So it has to be transferred to work in process, so that will be the contra account on the credit side. So we will have to debit work in process, our asset account. Administration costs, we will debit with all administration expenses. Remember, it could include, amongst other things, salaries and wages of administrative personnel, and then any other administration costs. So we will list all those administration expense accounts on the debit side as they form the contra entries. And then again, end of period, we need to get rid of this account. This one is a period cost, so it goes to our profit and loss account, which we will debit. So on the credit side, our contra entries, profit and loss account. Similarly, for sales and distribution costs from the nominal accounts, we will transfer to the debit side of the sales and distribution cost account. It might include things like the commissions paid to the salespeople, depreciation on delivery vehicles, etc. So all those accounts we will list underneath each other with their contra entries to the respective expense account. End of period. Similarly, then for administration costs, we will get rid of this account to the profit and loss account, our final account, which will be debited. Speaking of, let's focus on these final accounts, how they will look like, what their structure is. So trading account, we know since grade 10, on the credit side, we have the sales. On the debit side, we have the cost of sales. It was transferred from the sales and cost of sales accounts in the nominal account section to get rid of those accounts. Then the difference actually between sales and cost of sales is the gross profit, which will be transferred from the trading account. By the way, it wasn't shown here. They should have. It's a bit of an error, but you know this very well. So in this case, if sales is bigger than cost of sales, we still need a debit, namely profit and loss account as contra entry, and then we credit the profit and loss account. Trading account will be our contra entry. Then we saw that from the cost accounts, we transferred the administration costs. We credited that cost account, therefore we now debit the profit and loss account when we get rid of it. The same thing for our sales and distribution costs. And now the difference, hopefully our gross profit is more than our administration and sales and distribution costs. Then we still need something here, and that will either be transferred to the capital account or the appropriation account, depending on whether we work with partnerships, companies, sole traders, etc. So the profit and loss account is close off to the capital or appropriation account, depending on the type of business. If the manufacturing enterprise is a sole proprietor, the net profit will be close off to the capital account. If the business is a partnership, closed corporation or company, the net profit will be transferred to the appropriation account.